Last week, we saw one of the craziest things we've ever seen. We saw subreddit Wall Street Bets manage to increase the price of GameStop by $10 billion in its valuation. What did this teach us? This taught us two things. One, there's power in the people. We saw this Wall Street Bets act like a hedge fund that was basically crowdfunded that drove this price up. As I explained in my previous video, we saw people come together for a common good to react against injustices that were being done by these nasty hedge funds. And two, we saw on the converse side, the unequal power that these hedge funds have by going ahead and naked short selling stocks, manipulating the market with government help, whether you want to believe it or not, being able to call and shut down Robinhood accounts to prevent trades. They can give whatever excuse they want in this world, but we all know what happened. They knew what they were doing. They protected on who was invested in them and will be invested in them in their IPO and hitting that market. So what does this leave us to do? If we know that the stock market can be so insanely manipulated and we know it's not a fair game, where do we put our money? Enter decentralized finance. What does that mean? Decentralized means no one controls it. It's on a blockchain that automatically records transactions. It cannot be manipulated. It cannot be penetrated. 6,600 hackers, the very best in the world, have tried to break in and hack into Bitcoin's secure network just to change even a fragment of the blockchain and have failed miserably. Well, why is this so important and why should you care now? Well, what is Bitcoin? Bitcoin is a decentralized currency that cannot be manipulated. And truthfully, it was never really needed here in the United States. If you look at it, and it went through its bull runs in 2013 and again in 2017, what people didn't understand was people came for the speculation of it. They saw they could make a quick buck. And then what they did is once they started to see it go down, they were like, yeah, my money works here in the US. The government's cool. There's no big deal. And they sold their positions and caused it to go down. Well, then what happened? COVID happened. And what did we realize very quickly for any of us that are even higher than the average IQ financially? We realized, the US government can just put billions and billions and billions and billions of dollars into our system, actually trillions. It all went to big corporations on bailouts. It all went to make sure individuals could have long-term forbearances. It went to all these other things, that hidden agendas that were in these bills that never made it to me or you. And what happened? We see inflation. What is inflation? I don't know if anybody's noticed. If you guys paid attention and went to Home Depot and saw what the price of lumber is today versus what it was a year ago, it's doubled. If you haven't looked, the inflation and rising prices is around us. Why? Because our dollar is losing value. And people now, for the first time, are realizing, what the heck am I doing? Why am I trusting the government with a money that is not backed by anything, that prints a bunch more of it into circulation, that makes what I can pay for it 1 year later so much less? Now, imagine if you would have put in $10,000 into Bitcoin a year ago versus $10,000 into your bank account. Do you know how much money is going to be in your bank account today? Probably $10,050. Do you know how much money would be in your bank account if you put 10 grand into Bitcoin? I'll tell you right now, almost $100,000. And I'm not coming here to screaming at you guys like, oh, you got to invest all your money in crypto. But it's to show you guys a point that individuals are getting sick and tired of working their lives so hard to put money in the bank to a financial institution that charges you money to keep it, then levers that money 6 to 7 to 8 times, okay, and makes investments and makes a lot of money on your money and pays you less than 1% in interest. And then if you want to send your money to anybody else, they charge you to do that. And that person receiving it, if it's not in the same country, they take a bunch of money from you doing it. Now enter in decentralized finance. And we'll use the big one, Bitcoin. What does that do? It is a store of value and it cannot be manipulated. Satoshi, who wrote his white paper, knew that this would work based on two reasons. One, people to see value in something, real value in something, there has to be a finite supply. It means it can't exist in abundance. Two, you have to find a way to automatically have value of something increase. You look at the very simple principles that our entire economy is based on. Supply versus demand. What happens when there's more demand for something than supply? Price goes up, right? So he did something called a halving. And what that basically means is there was a certain number of Bitcoin that was released into the system every 10 minutes. And then every 4 years, the next set, every 10 minutes, was cut in half. So what is called a halving cycle. So we had a halving cycle in 2013. We had another one approximately in 2017. Then we have another one in 2020 on those years. So it's roughly every 4 calendar years. What happens is half the supply gets pulled away. So what happened last spring when half the supply got pulled away? It was the first time that people realized, shoot, our money's not working very well, because why Bitcoin supply was being taken away, what was the United States dollar supply doing? Shoved into the system. And every time you have that, it's followed by a bull run. A bull run means the price goes up because the demand didn't drop during COVID. The demand, and the first time that people realize, wait, this thing has now survived 11 years and we actually may need this. We actually may need to store our value in it because our money's not working so good right now. So all of a sudden supply, half the supply gets pulled out, and what happens? Demand, it goes up. And we start learning institutions are buying this and buying it heavy. We're seeing people, Microsystems, he actually went in and put $400 million of his cash into Bitcoin and was like the poster child for cryptocurrencies ever. Followed up by Paul Tudor Jones, one of the greatest hedge fund of all times managers. And then we saw Ray Dalio, who managed one of the largest hedge funds in the world, starting to adopt Bitcoin. So we're starting to think, wait, the smartest economists in the world and smartest money managers in the world are realizing something that we all are realizing, that our money is losing value and losing purchasing power in the bank. So what happens? We start to realize there's more demand. There's less supply at the same time of COVID with a massive printing of money. And what this has now led with the amount of exposure that people are finally understanding in this, in the adoption rate of it, well, now the cryptocurrency market is a $1 trillion market cap. That is massive, okay? That is far beyond the point of ever coming back. So how do you protect your money when you know that the market can be manipulated very easily? You choose to hedge your wealth into something like Bitcoin. Why? Because the great thing that you know is it cannot be manipulated. The government cannot come in and say, here's 21 million more Bitcoins. No, they can never change the code. There's the same amount of Bitcoin being done every 10 minutes into the actual economy. And from that point, in 3.5 years, there's going to be even half of that left. And once 21 million is done, there is no more that's ever going to be in existence. The ability that you don't have to worry about somebody coming in and deciding they're gonna naked short sale all of your positions. You know why? Because naked shorts don't exist in cryptocurrency. You can never, like you had in Gamestop, ever had somebody sell more than 40% that has ever existed, right? That was the problem with GameStop. These hedge funds sold more shares of GameStop that ever existed. And they were allowed to because they can manipulate the market. So if you want to prevent that manipulation and you actually want to protect your money against inflation, I strongly suggest taking a small portion of your allocation and just dollar cost averaging it in. You can never pick the market exact day right to buy. So buying a little bit every single day or every single week, and you don't need to have $36,000 or $37,000 to buy one. You can literally buy $50 worth of a Bitcoin, just like you can buy a fractional share of a stock. I strongly urge you, protect your wealth, learn something from what happened in GameStop, and protect your future and make money doing it.